Good day, my people. Happy new month of February. I want to show us what we expect in this month of February and how to trade. What are we going to trade this month of February? The direction of the market and where the market is going to. Oh, let's start from the US index to know the direction of the dollar. That's the first. Okay. Now let's delete all this and start afresh. Now we start from let's start from yearly candle. On this yearly, we can see that market is acting, is giving us some rejection, accept this liquidity, giving us some rejection that market wants to go up. Although the candle has not closed yet, but we still expect market to push up. It's either to this supply zone, So that means we expect more buys to this supply zone. So let's go to let's move straight to 3 months time frame. On this 3 months time frame, what can we see? We can see that market close as a contraction. Can we see market close as a contraction, giving us what? CLT formation. Market close below this candle, giving us CLT formation. We can say we can pick this or we can pick this. Let's pick this for us to. Then where is the market going? Like I said before, market is coming to this up first TP, and this is another supply zone that we can expect market to push back. Let's go to our monthly time frame. On monthly time frame, we have this this market swept this liquidity. Where is it going? Going for the buy side liquidity. That swept the sell side liquidity, then going for the buy side liquidity. On weekly time frame, all the same. So market close as a contraction inside, so we expect market to push up for us to enter. Where are we going to enter this trade? Now, if you can see very well, market has closed above this last bearish candle. Market has closed above. This is telling us that market will open like this, come back to the demand zone, then giving us our TP, going to our TP. So this is what we expect. And where are we going to enter the trade? Where do we want to enter the trade? We expect market to give us something like this. It's either market open, close above this supply zone like this, and give us the retracement. So giving us something like this, open and close. So we trace to this. The supply zone will now be demand zone. This supply zone is supposed to sell the market down, but it will now be, if it break as a body, it will now come back there and giving us what? A supply zone. Supply will be a demand zone. So that's what we expect. Or we should see markets come down to this area. This will be our new demand zone. So we have two options, either option 1, option 2, because we have this breakaway gap here, or we have this another breakaway gap here. It's either markets come back to this area for us to buy, or market break this and give us a breakout block so that we can join the market. So this is what we have on on DXY. So that's what we expect, and we expect our TP to be what here as a swing trader. So that's that. Let's check another pair, which is Let's go to our Euro USD. On Euro USD, you have been selling all these markets since when? Since Friday, Thursday, Friday, yes. Let's check 3 months. Let's start from 3 months on this. So on these 3 months, if you can see very well, you can see that this market rate this liquidity up here now close as a contraction. This is telling us that market is going bearish. Then the first TP should be here, and then the second TP. You can say market should mitigate this fair value gap. So let's just put the TP there, or here, this demand zone. Then on monthly time frame, on this monthly time frame, we see that market has closed as a contraction also. Then after closing as contraction, where can we join the market? This formation is giving us CLT formation. And where is the market reacting from? It's reacting from this supply zone. So let's check weekly time frame. On this weekly time frame, it's still all the same. So we want to check where we want to enter the market from. Daily time frame. Daily time frame close as a contraction, bearish below the candle, the supply, the bearish candle. So it closes as bearish below the bullish candle. So this is giving us that newly created supply, which we expect our market to come like this before selling. So this area will now become our what, newly created supply zone. All this area will be newly created supply zone. Let's check for 4 hours to see where we can enter the market. Let's delete this. So where we can enter the market now is, we expect this market should come back to this area. This is newly created supply zone, which we expect market to come from there. We should continue selling the market Euro USD. We stop from 4 hours. Then where are we expecting our TP to be here? So let's put it like that and wait for the confirmation. Then let's check GBPUSD. GBPUSD is almost the same. So can you see? Now we have been on this trade since Thursday, Friday. Yes. Let's delete all this and start from afresh. Okay. Now, where is the market reacting from? It's reacting from the supply zone. Then we have this other CLT also. So which market is giving us that CLT? Where is the market going? We expect the market to come back to this first liquidity, second liquidity. Let's just pick all this as a liquidity, and we can see market should come back to this liquidity also. Let me check 3 months to see where the market is going. Okay, so that's that. Let's check weekly time frame to see where we can enter the market. The weekly time frame is still giving us the CLT5. On daily time frame, we supposed to have markets to close below this level, but market is not close below it. But this market has given us bearish engulfing to this doji candle. So it's still all the same. We expect market more push to the downside. Market may come from here to this supply zone before pushing down, or we should see continuation of this to the downside. Let's check 4 hours time frame. On this 4 hour time frame, yes, markets can still push to the upside and come back to this what, supply zone, like Euro USD. So you can see from this demand zone, this demand here, You can see a push to the upside, then come back to the downside for market to give us sell. We will stop from 4 hours today because today is Sunday. We will check how the market will open on Monday so that we will know how to join the trade. Let's check USDJPY. The USDJPY also. So can you see we have this trade also going on USDJPY, but let's see how we can enter this chart, this trade. Let's delete this. So how can we enter this chart? Now we see this market has reached the liquidity, it reached liquidity here also one. Then the second liquidity that market reached is here. Market rate is liquidity with just single candle. Where is the market reacting from? Market is reacting from this. This is IFEG one, and then this is also FEG. Market is reacting from this IFEG and this fair value gap. We can put it that way. So this is where the market is reacting from. So what do we expect? We expect more push to the upside. So let's check our weekly time frame to see where we can still enter, and then where this market reacts from here is also demand zone from this area. So we still pass and reach liquidity below this. Let's check daily time frame to see where we can actually enter from with the market. Now this market close above this bearish candle, which is very very okay for us as a trader. It's close above this candle, which we need market to pull back small to this bearish, which is demand zone to upside. So now if we see markets close come back to this level demand zone, we take our buy after we see the confirmation. Let's check 4 hours, which the last place to stop. Okay, now on 4-hour time frame, we can see that markets create this supply before going, which we expect market to, as it creates this supply, we can expect more buys. Okay, now we have two zones. Now that's why I say we use confirmation entry. We have this first zone here and we have the second zone. So it's either markets give us pull back to this area and buy, or markets come back to this level and buy. So we have two zones down that we can say we expect market to come. So let's watch out and see what is going to happen on this area. Let's check two more pairs. Let's check gold, XAUUSD. On this XAUUSD, let's start from monthly time frame. On this monthly time frame, we can see as this contraction is, market is giving us contraction from the monthly time frame. See this week. So let's see, we don't have much information from there. We still see that the market is bullish, but as this contraction is coming, so we can still see market has started reversing. On this note, we have this CRT on this weekly time frame. So as we have this CRT, where is the market going? So we have markets to close below this, and all these places are liquid. Let's check monthly to see where the market. Okay, now can you see this low is liquidity? There's liquidity here, there's liquidity resting below, but we can take this liquidity as our first TP. So this all the same. Now we have CRT below this. Let's check daily time frame. On daily time frame, can you see this market has closed bearish below all this candle? Only single candle closed bearish below this. So what's the way expect is to see a pullback to inside this supply zone, then we sell to this level. So this is what we expect. Let's go to 4 hour time frame to see where we expect this market to come. Now on this 4 hour time frame, we can see this is another supply zone. Yes, this is another supply zone which has a tiny fair value gap here. So we expect market to push up, either to push up to this level or to continue downside, or this is another, we have another demand zone which market just broken. So either market come back to this level and sell, or market should pull back to this upside and sell. So one of the two will happen. So we have two options. Once we see alignment, we take our choice. The last pair that I want to check is USDCHF. Let's see what USDCHF is saying. Okay, on this USDCHF also we have a running trade that is going on. But let's delete and start from a fresh. Let's check for monthly time frame. What do we see on monthly time frame? We see that this market is giving us accumulation, then all this phase is what we call accumulation phase. We see manipulation before distribution. Why did I say this will be manipulation? Is the US index is correlative pairs to this USDCHF, and we see that US index has already given us what confirmation that this USD pairs will be buying, so we will be bullish. So now we expect our TP to be here because of this imbalance, so that market will come and fill this imbalance, and all this liquidity will be swept out. Then let's go to weekly time frame to see actually what I'm saying. Can you see this contraction? This contraction, although the market is sweep this bearish candle below, and there is a lot of contraction which is giving us that markets will buy. On this 4 hour, on this daily candle, we expect more candle to close above this, so that it will give us what bullish alignment. So once markets close above this, it will give us what bullish alignment. Once you see this, come back to this, so we will target the high, which is this place. So we want to see more bullish alignment. Let's check 4 hours, which is the last time frame that we check today, because we are in weekend. We want to see how the markets will open before we do what, before we take the trade. Now we have this supply zone here, or we can say it is also resistance. So now once markets close above, we want to see retracements to there, break and retest. So before markets give us a confirmation that this market is going to do what, it's going to buy. So let's see how this market will go, and this is what we have for this year, for this month of February. So let's watch out and see how the market will go. So I wish you guys best of luck and happy new month. Follow for more videos like this, and if you like this video, drop a comment, and if you have any question about anything, can drop a comment and message me. So that's that about that.